Welcome to lesson 15. This is of PSRM Fundamentals Overview. This is a quick summary of the lessons which we have gone through, lessons 1 to 14, and the things that we have learned. This whole section by just reiterating and again the large picture of the functionality and what we saw through the example that we took, which was a case of a particular business called Store BB. We looked at three different quarters. The first quarter, which was filing for and had amendments, and we eventually created an overdue and we wrote off the amount. That was what we saw in the first period, the first quarter, and we wrote off the amount written off over here. What then we went on to do was create some overpayments for the second period, and then we cancelled the payments. And then what we did, in the third quarter, we created a very large overpayment, which eventually offset the amount for the second quarter and paid that amount off. What happened in the third quarter was that we also, with the large overpayment, we actually sent out a direct deposit of 1,200, and then it was left in a 200 amount still in overpayment. We actually showed suppression and how that worked, but then what we did was we created an audit, and the audit actually added some charge of another 500. So it ended up that in the end the taxpayer still owed the authorities 200, which went through an appeals process and then finally a bankruptcy process, which, although we haven't shown here, ended with discharging the amount, and would end up, we could create an overdue process to write off the $200 remaining. So what we saw, to summarize in a different way, we started off by looking at the main registration entities, the person, account, tax roll, and obligation, and the admin objects. And once we did that, we introduced forms, the registration form and the tax form, to create those main entities and add on assessments. We then described financial transactions and what adjustments are, and saw how adjustments and assessments are basically the same thing, except for the assessment has a header, a group header. And we saw that the importance of a debt category, that there was a categorization of adjustments by debt category, which is used for P&I. And we saw how payments works, and the fact that payments pay off on an obligation based upon the debt category priority. We looked at P&I in the configuration. We saw it's rather complicated to set up, but we saw the overview of the importance of when the time periods for each particular penalty, for failure to file and failure to pay, have different due dates, and the date when the tax form comes in, and for payments, when the payment comes in. Those are the time periods, and then we saw the actual rules for each one of those penalties. And we saw important concepts like the calculation basis based upon the debt category, and we saw the accrual dates and how often we make the charges, monthly, daily. Once we completed looking at the financial transactions, we looked at the collections, and we saw the overdue process. We saw the fact there's a sequence of events that the overdue process needs to go through. Often these events are linked to each other, and then after the overdue process, runs, there can also be something called a collection process, which is a less formal, less event structured type of way of trying to get the money back from the taxpayer, and it can be triggered directly from the overdue process itself. And then once the collection process ends, the overdue process can continue and write off the amount if need be. It can also create some things like pay plans of the overdue of the collection off the collection case. And the pay plans is a way of, again, trying to split the charges into smaller amounts on specific dates in the future, which will encourage the taxpayer to pay. We looked at overpayments. We saw different types of overpayments. We saw those which are sent back via check and those by direct deposit. We saw the importance of a refund control, that the refund control is always needed to have authorization that there's enough money to send out the amount, to send out the bulk amount of refunds every day, and we simulated that. We saw also that for direct deposit there's a need to have a bank event which actually shows how we create the format of all the bank extract information and sent to the banks to get authorization that the banks have done the direct deposit and it's been accepted by the banks. And there haven't been mistakes in the actual information given by the taxpayer. We also saw that if there is a debit on another obligation, the overpayment process will first of all offset that amount to that that debt obligation, and only after that it will pay out the remaining amount as an overpayment, as a refund. Finally, we saw a few case management examples. We saw an example of an audit where we were auditing a particular tax form, and we can add new assessments to the tax form, and we can see the new amounts as a result of the new assessments. And we see there's a review process related to that audit to allow back and forth between the person who is doing the audit to relay the information on what was happening, and then allowing also the taxpayer to actually input and say whether he accepts the audit or not, and it can be escalated and so on. Similar process we have for appeal, and then we finally saw the bankruptcy. We saw the ability to actually create a bankruptcy case life cycle in which the taxpayer has to prove through the courts that he's really bankrupt, and then only then can you start a discharge process.